we have deals that are closing. And as sad as everything that's going on and troubling as it is, we're trying to, conduct business as normally as we can. What I'm seeing now is that transactions still are getting signed. For those of you guys who negotiated accepted offers 10 days ago, I'm sure you're renegotiating prices. I want to talk about deals that are not in contract, how negotiations are suddenly changed in the last 7 to 10 days. Deals that are in contract, what are we going to do with those? What we forecast the banks doing, and new development and how that's changing. So when we're talking about deals that you had accepted offers on a week or so ago, obviously, the first thing consumers are going to think of is, am I now overpaying for this and should I renegotiate my price? We've had that on a number of transactions. The thing that I'm most concerned with, and I think that that's going to be the biggest item for us to discuss in any of our transactions, what happens if this gets worse? How do we get a consumer to feel protected and secure in proceeding with the deal during this time? Obviously, none of us want a complete halt in the market for the next 60 to 90 days. How can we still get contracts signed, mitigate the risk for a buyer, get sellers to embrace that this is a short-term new reality? So those guys who remember during financial crisis, we had, I want to say it was 4 of the top 10 home mortgage lenders went bankrupt. So they all issued commitment letters back then. And the irony was, from 2005 to 2009, I had not read the mortgage contingency provision once. I read it when I first started practicing law, closed hundreds of transactions, not one was contingent on financing. It was assumed. There was no concern back then that you were going to get financing. Now, all of a sudden, a crisis ensues, banks are going under, which we never saw in our lives, and the financing contingency became normal again. Now, fast forward to present day, the financing contingency is not, obviously it's something that has been utilized in a good majority of or a good percentage of our transactions. Now, it's not enough, because if I'm a bank and I'm issuing you a commitment letter, and all of a sudden I'm not able to lend due to economic issues, economic concerns, the coronavirus, I can withdraw that commitment letter and fail to fund the loan. Now, technically speaking, the commitment letter is supposed to give buyers/borrowers the confidence and assurance they will get this loan, and the bank is giving you a formal commitment in writing stating that. Practically speaking, good luck getting in line and suing every major institutional lender in town. They have the ability to withdraw them with basically no recourse for a borrower or a borrower/buyer. Now, we're trying to craft funding contingencies again. And we're doing this both on contingent deals and honestly non-contingent deals. Because in this scenario, we can't forecast today. I mean, if you look at today, when I left the office last week, it was night and day difference, today's market and today's situation from just 7 days ago. I can't forecast if we sign a contract where we're going to be in 60 to 90 days whatsoever. So the funding contingency is something that we are focused on, but we are limiting it to issues stemming out of the coronavirus or an economic, collapse that causes banks not to lend. It's not completely open-ended. It's something that we are trying to carve out specifically for this instance. And I'll give you a good example. I had a transaction on a co-op where my client was close to $5 million. And we just got it fully executed on Monday, actually. Our client was buying the apartment, 75% financing on a non-contingent basis. Now, we started negotiations, I want to say probably 2.5, 3 weeks ago. And the first thing they came about said, okay, well, let us think if we should proceed with this deal, which every consumer is having second thoughts. And from my perspective, from a legal perspective, I said, give me your exact concerns. You're proceeding on a non-contingent basis. My client works at, actually is a banker at the bank he's getting a loan from. I go, what is it that you're exactly concerned with? Is, well, number one, part of it's price. And I'm like, well, that's for you to decide, chat with your broker. I can't give you that advice. Number two is, what happens if, things really go south, the market plummets, and we're in a predicament where banks aren't going to be lending. So even in a non-contingent deal, we carved out a very unique funding contingency where we can only get out of the deal if the bank is unable to lend solely due to what's going on today. And he ended up reducing the price, I want to say 150 to 200,000, which off of, a price of close to 5 million is not a tremendously high number. and sorry, and in negotiating a minor reduction in price and giving him the assurance and comfort that he is secure in this deal, because going cash, if things, if an economic collapse took place, was not an option, he still proceeded. So that was really, really good to see. A lot of people are walking away, obviously. Not every story is a rosy story. I wish I could say that. But a lot of clients are walking away from transactions just out of the natural fear. I mean, a majority of people's net worth or liquidity just went down 20 to 30%. And we don't know where this is going to go. So it's our job, I think collectively on this call, is to try to ease the paranoia and ease the anxiety that's taking place to the best that we can, and also just try to figure out how to navigate through this time. Obviously, the in an ideal world, we're getting what I'm proposing. I think now, for at least the foreseeable future, if your clients need financing, I wouldn't negotiate a deal that's non-contingent. I think it'd be crazy in this market to proceed without some form of financing contingency. I know that's not ideal, but in my scenario that I told you about this transaction, the seller fully embraced it. And to be quite honestly, I'm sure they were just happy to be able to get a deal under what's going on. I mean, we've not seen a pandemic in the marketplace. This is a lot different than the financial crisis. The economy and employment and everything was going great up until this happened. This was completely unforeseen, and it's not a decline that's driven by economic factors. It's a decline that's driven by a pandemic. The financial crisis was a decline solely based off of subprime lending, toxic mortgage-backed securities. Those were fundamental economic factors that brought this down. So I think we're in a much better boat. Just right now, our anxiety is being driven by the fear of the unknown. We don't know how this is going to pan out. But for those of you guys, so we talked about resales that we are currently negotiating. Logistically speaking, how are we doing closings? We're doing them by mail away. Cuomo just authorized notarization of documents via FaceTime, like we're doing today, which isn't something that was previously permitted. And we're able to wire funds, do everything electronically, and that all sounds well and good. But the issue that we're going to encounter is if property managers close. Condominium closings. For condominium closings, if boards are unable to issue waivers or right of first refusal, we're stuck. Presumably, they can issue waiver right of first refusal and email it to the group, and that should not be a big deal, and we can be able to conduct closings electronically. Co-ops is the bigger issue, because if managing agents are closed, I don't know how we're going to do this. I don't know how co-ops are going to issue stock and leases. It's going to be a difficult one. I don't have the answer for that right now, but we'll just have to wait and see. The other one we're doing, the other topic I want to chat about before going to questions, are sponsor purchases. We are now negotiating a number of sponsor deals. As you know, sponsors are extremely reluctant to have any sort of contingency, regardless of market conditions. I'm in the process of every sponsor deal that we're negotiating asking for these funding contingencies. I don't have any that sponsor deals that got signed this week. So this is going to be an evolving storyline, which I'm confident we will get something, because at the end of the day, I don't see what choice anybody else has. If the buyers aren't going to be receiving any security and entering into a deal, unless it's a cash deal and they think that the price is, still justified, or they got a reduction in price, everybody, including sponsors, is going to have to adapt to this market. So next week, I should have more information on that. Obviously, we know new development has had its challenges to begin with over the last couple of years. So this is definitely not going to help. I will tell you, though, I'm negotiating one deal now, a 1031, where my client's from overseas, he's being paid above market rate due to personal reasons for the buyer. They're looking to join properties, and my client's looking at this as an opportunity to buy a new development at probably the most negotiable rate it's been in a decade. So there are people out there who are looking at this as an opportunistic time to try to secure a good deal. But I want to go through your guys' questions with all that being said. A lot of these questions I probably did answer in my little rants just now, and I apologize if I went through that too quickly. But one of them that we're having here is talking about getting out of contracts. If I'm in contract and I signed a contract, I'm having this call every single day where someone signed a contract 60 days ago and they're saying, do I have a right to get out of the contract given what's happened? The contract, and no writer in town would have contemplated this. So the answer is no, you don't have. This does not provide you with the right to get out. This is not like a lease where if you have a force majeure, act of God, something along those lines could help have you have an exit strategy. In this scenario, anybody who's bought is committed to the deal, and they do risk losing the deposit if they default. Even if you sue over the deposit, I don't think you'd have a leg to stand on in court to say, hey, the market plummeted, coronavirus came about, I should be entitled a portion of my deposit back. In any contract dispute where one party is alleging default of another party, 9 out of 10 times we settle. So you may start seeing that again. What we did, I remember, back in 2008, and I'm going to cross-reference the financial crisis a lot because there's nothing else that has been relevant in the last 15 years. During that time, I remember I probably had 50 new development deals on my desk. I got 50 phone calls of, Pierre, how can you get me out of my deal? That back then, there were a couple, caveats in the offering plan and attorney general regs that provided a few of rescission. Most commonly, though, we renegotiated pricing to secure deals. We would go to the sponsor and, basically say, we're going to sue over a deposit. Here's an argument we have, which we believe would entitle us to potentially write a rescission. However, we'll stay in the deal if you reduce the price by X. It was mainly scrambling to figure out how to preserve deals. And we're going to be back in that boat where everybody's saying, you know what, I want out of my deal. They're not going to get the answer they like in terms of you don't really have a clear cut out. And we're going to be thinking, how can we go about and renegotiate the terms to make this still a viable option for the buyer. Now, I'll give you an interesting story. I have a client, I just got this phone call yesterday. They got approved by the board 2 weeks ago. We don't have bank clearance yet, so we didn't close. Client calls us up and says, Pierre, I don't meet the co-op's post-closing liquidity requirements any longer because my portfolio just got slaughtered in the market. Shouldn't I be able to get out of the deal because I'm no longer financially qualified? And it's an interesting, I thought it was rather creative. Practical answer to that, though, is that no, they don't, because the board approval has already been issued. Unless the board goes back and says, hey, we want to, go back and review all these applicants we approved prior to this happening that have not yet become shareholders, there's no out. And if the buyer, our client, goes to the board and says, hey, board of directors, I no longer am financially qualified for your building. Look at my portfolio, it stinks. They're going to risk losing their deposit because that's called, basically applying in bad faith and trying to dodge the interview process. So I thought that was a very interesting one. So those deals are secure from besides the risk of buyers just deciding to walk away. We're going to start seeing that again, where buyers are just, I'd rather lose my deposit than buy in a liquid asset, which I feel is worth 20% less than what I'm in contract for. I think the thing, when I go to my example with the transaction of close to $5 million, the logic for our client in terms of why they proceeded is they signed after this happened. That's the most interesting thing. Their logic was, we're buying this for our children to live here till they're in college. We're owning this for 10 years. We are still getting extremely good value. We got a little reduction in price to make us sleep at night. And our interest rate went lower than it was a couple weeks back. Given the long-term objective of this investment, this still makes sense for us. And I wish all clients were that rational, to be honest with you. That was a great scenario for us. A lot of people in times like this obviously become irrational. So I think the objective for us is to kind of break things down to what exactly effectively is the perspective and desire for the client in potentially doing a deal now. And work together in facilitating that and fostering that mentality. To keep going through some of these questions, so someone asked, can buyers get out because of the virus? I think I just went through that one. That's pretty much no. Another question is, do you think banks and co-ops will allow for digital signatures? I believe that we are getting there. One issue that I had yesterday on a closing, we had a closing scheduled for yesterday, and then Cuomo came about and is pushing a law which allows borrowers not to pay their mortgages for 90 days. the bank adjourned the closing right on the spot. They said, we have to become more familiar with how this will impact us and impact issuing this loan if borrowers can, no one wants to fund a loan today and not get paid for 90 days. So that's something to keep your eyes and ears open for in terms of, if that does pass, how will banks still proceed? Not all banks are taking that position. We're closing a bank deal today, but that's definitely going to be one of the storylines. Another question I received talking about Corona clauses in contracts. I think I covered that one in the beginning. We're not, ideally in our transactions, we're going to request a pretty broad funding contingency. In order to get a transaction done, we realize that we're going to have to negotiate that contingency, and it's not going to be so simple as, buyer can get out of the deal if the bank fails to fund. That's a rather broad provision. What we're trying to do is that we're putting the burden, if we must, on the buyer to obtain a statement from the bank describing the reason why they're unable to fund. And in describing that reason, it's going to be related to the coronavirus or, an economic collapse, which is impeding them to be able to issue mortgages. It's not related to necessarily, let me backtrack a second. The blanket funding contingency would allow the borrower to cancel for any reason whatsoever, including if the bank says the property no longer appraises, that the numbers don't work for us, including if a buyer gets laid off of their job, no longer has employment, things of that nature. Now, in breaking it down, obviously depending on the nature of the deal, some buyers are still going to have to assume some element of risk. So in some of these funding contingencies we've negotiated, we carved out issues related to the borrower. So if the borrower's liquidity continues to decline, if the borrower loses their job, they're assuming those risks. So it's a matter of, how much demand is there for the property, how much of a discount in terms of pricing, and what we can get both parties to become comfortable with. Let me go through a couple more of these. One talking about how many calls am I getting for renegotiating prices and changing terms. I think I covered that one pretty well. Answer to that one's daily, unfortunately.
Pierre?
Yeah.
If you're renegotiating a price, the contract price states one thing, so that's a legal document. Are you amending the front page of the contract to reflect the price? And then if there's a mortgage on it, the mortgage is a percentage of the appraised value, which might not no longer correspond to what the price is. So what are the logistics of getting that done, negotiating a price that's different, that's ultimately different from the contract that the market also tied?
Yeah, that's a great point you bring up. So there's a few ways to do it. You can amend the contract to provide a credit towards the price as opposed to amending the price. And federal guidelines allow for seller concessions of up to 6% of the purchase price. So it's something that it's not, a black and white answer necessarily, because we have to go talk to the banks and see what they're comfortable accepting. So that's the simplest, but that's assuming the concession's only within 6%. If you're having more of a substantial price reduction, let's just say 10% for conversational purposes, we would amend the contract and either provide a credit or just change the price entirely. And in all likelihood, the property would have to be reappraised. Has to be reappraised, make sure the numbers still work out for the bank. If the buyer is financing 80% of the purchase price, chances are they're going to eat with a price reduction. They're going to be required to potentially put down more money. So it all depends on what the loan to value ratio is, the amount of the concession / reduction, and us working with the banks in order to facilitate that. But that's all achievable. I mean, we'll work through that. It's more so the concern is preserving the deal through business terms, and how many sellers would like to come up with a compromise as opposed to go to court and litigate over this.
Good morning, Pierre. Got a quick question for you.
Yeah.
I got 2 board approvals yesterday, and the problem now is that a lot of these buildings have put moratoriums on closings, period. So how we, like we all aspire to get to this point of the board approval, and now your client, let's say the seller wants to close, but the buyer doesn't want to close because the building's not going to let them move in for 2 months. So how to, is that like where you have to renegotiate at the table a credit for the fact if the seller wants to literally close, credit the buyer 2 months worth of, of the cost of it because they're not going to actually be able to use the apartment? Like, who picks up that period of time?
Yeah, I think you nailed it right on the head. If the seller wants the buyer to close now and the buyer can't have access to the unit, I think it's logical for the seller to propose picking up the buyer's carrying cost for that period of time. And it's in the seller's best interest because they're preserving their deal. Take the funds from the closing and run. Don't wait months. Who cares about, quite frankly, I mean, not to spend other people's money, but who cares about 2 months of carrying under these circumstances?
Right. So I'm saying, so but in addition, because they are now taking on a mortgage, does that go into it as well?
Well, here's the thing. If the bank's willing to fund the loan and close now, you close now because we don't know what the world's going to look like in 60 days. Okay. So I definitely think that's the best course of action. So if we wait to 60 days, documents will expire, liquidity will change, employment may change, appraisals may change. There's a number of issues that can go bad. You want to do whatever you can to close these transactions now.
One in hand, got it.
Mm-hmm.
Pierre, Antonio, how are you?
Oh, hey, what's up, Antonio?
Would you be open to letting me jump first because I have to jump onto a different call and I'm late for it? So Pierre, are you okay if I chime in and add a little industry intel that we've received recently on the executive order from last night?
Yeah. Hey, you give me a little bit of water break. Go for it.
Good. So hello, everyone. Brian from TitleVest here. To help give some clarity on the executive order from Cuomo last night, although he's on TV issuing another one right now. The executive order from last night that authorized the remote notarization. For clarity, that doesn't mean that everything can be recorded that was done remotely. We still have to move things through. So stay tuned for more information on what that means. Don't start restructuring your transactions without talking to your lawyer like Pierre and making sure that they've sort of like they have the understanding of how to do it in a way that will still be a recordable, insurable, closable, guaranteed transactions. Don't take it quite yet. Give the history and our conversation with the governor's office a little bit of time to get the precise details ironed out of how we're going to incorporate this into our closing process. I think the thing that all of you and myself as well, and I think Pierre and Heather and all would agree to this, is it does help us unlock the gears of the economy and help keep the gears in the process moving while we're all functionally self-isolating and quarantining. I have to jump off for another call. But I just want to say a huge thank you to everyone for joining, being so involved, being so engaged in helping make a change and an impact in all this. Pierre, thank you for your wisdom and advice and guidance. You're hitting all the nails right on the head. I think your perspective is precisely on point. So thank you.
Great. Thanks, Brian. Appreciate that. One other point I want to bring up before we go back to questions. Deals that we're going to negotiate during this time, new deals, obviously volumes and decline substantially, but for new deals that actually do take place. Property managers are emailing board minutes, which has been good. We had a couple board minutes emailed to us the last 10 days, enabling us to still conduct due diligence. We're changing, it's important to know in a co-op contract that the form provides from the on or about closing date, if the board does not issue a decision within 30 business days of that date, both parties can cancel the deal and the buyer gets their deposit back. So we're extending that deadline in the boilerplate contract, hedging against a massive delay in board interviews. So that's something to be aware of. And also, if we're unable to physically schedule interviews or attend closings, one provision we're throwing around today in the office is that what happens if any of the parties required for closing cannot attend closings, they contract the virus, and how to get around that. So deals that do take place, there's just a couple anecdotes I wanted to bring throw out there. But I believe somebody had a question or was in the middle of a question right before Brian jumped on.
Yeah, that was me, Pierre. Hi, it's Antonio.
There you go, Antonio.
Hi. So I have over a dozen investors ask me who's have leases coming up with their tenants and have current tenants. And of course, there's the announcement that besides the mortgage for 90 days and having that not be paid, but renters are also being excused from 3 months and probably more. Maybe you don't have an answer for this. Some of them are moving out and now staying. Also, there's a moratorium for eviction. What is your take on investors going, I need to get this tenant out, or I need the rent to come in? How do I legally get it from them? And how I've been handling it is just saying to them, this is a new norm, and also act with compassion. And they can also get 90 days off of paying their mortgage. So what is your take on that?
Well, it depends on the asset class in terms of the 90 days. So we do a lot of office leasing in the firm, and every office tenant in New York City is calling saying, I'm not going to be able to make my rent because of the unexpected loss of cash flow. What do I do? Now, on the residential side, obviously there's a pause on evictions for 90 days. It really, from the landlords are going to be in a very precarious position because you can't go evict anybody. So then if that's the case, what's the tenant's incentive right now to necessarily pay you your rent? All landlords have to be sympathetic to the situation, maybe negotiate a short-term reduction in rent. And then once, the world comes back to normal, whenever that may be, amortize the shortfall over the balance of the lease. That could be one option, or have a lump sum payment for the reduction of rent that is paid at the end of the lease. We're gonna have to get creative. Right now, eviction's not on the table. So if you're a landlord and you don't have that in your back pocket, what's your leverage to force a tenant to pay? It's more so just working with them and trying to come up with a payment plan. And in reality too, a lot of them are going to be forced to just give reductions in the rental sums. If tenants jobs are going to be lost unequivocally because of this, incomes are going to decline, and you don't have much of a choice.
Pierre, I have a few questions that I've been getting sent in. One of them is from Steve Dawson. He said, Cuomo just announced that all non-essential employees stay home. Can you ask that if means all closings will be postponed, and how long can closings be postponed before someone can walk away?
So non-essential employees, I don't think they've really, defined what that means. The way we did it in our firm, when we did this last weekend, stating that unless you have to come into the office, don't come into the office. Meaning that if you have a closing to attend, or you must be in the office to prepare for a closing, that would deem you to be an essential employee. Otherwise, stay at home. I've been coming in every day because my two kids are going to drive me nuts if I stay home. So I've unilaterally named myself an essential person. How that's going to impact deals. The deadlines, we have a deadline in the contract with respect to board approval. That's going to be an easy out if the board does not issue a decision within the 30 business day period I discussed. Deals that are in contract, say like a condo, and I'm getting pressure on one today where the seller wants to close. I don't have bank clearance, and we may enter into the time of the essence back. Logistically speaking, how the 30-day right of adjournment isn't statutorily 30 days. It's quote unquote a reasonable adjournment of the closing date. So it takes all the factors into consideration and how you determine what reasonable is. So in this predicament, if I adjourn a closing 60 days, good luck trying to keep my deposit, cancel the deal, and claim I'm in default of the contract and impose a TOE date. It'd be virtually impossible. So everything will be delayed until it can actually close. That's the real answer. Historically, the TOE route is really one to provide leverage and get a party to actually adhere to the terms of the contract. 99.9% of the time, those deals close. I got to say, I can count on one hand in 15 years how many TOE letters actually went to court and were litigated over the deposit. It's just a matter of time. So everybody's just gonna have to be more patient. Everything's gonna take longer, but as long as the banks are still, as long as the parties still have some intent of conducting or doing the deal, and banks are lending, we can all figure it out together. We just have to work together, hand in hand daily and get it done.
Thank you, Pierre. I have another question. What about buyers who are in new development contracts and are now worried they can't afford it?
Mm-hmm. So the first question is, does that buyer have an out for any reason that is provided for in the offering plan or the contract? As we all know, there's very few outs provided for, if any, in new development. The most common and easiest one is that the AG regs require that one unit in the building has to close by the end of the first year of anticipated condominium operations. So what that means is that if Schedule A states that first year of condo operations was January 1st, 2020, it means one unit has to close by December 31st, 2020, or else everybody gets a right of rescission. Undoubtedly, construction is going to be delayed because of this whole epidemic. So with construction being delayed, we may actually come close to those dates on a couple of deals. So let's just say we don't have that leverage that I'm describing. It's more so going back to developers and threatening to walk away. The developers in this marketplace, want to be suing over deposits, having contracts in default, and not securing deals, having their deals in contract. It affects their ability to declare the offering plan effective. It affects their covenants, their construction mortgage. There's a number of negatives for them. So more so for the practical perspective, it's really going to be going back to developers and stating that, under the circumstances, our clients are inclined to walk away from the deal, even if it requires them losing the deposits, unless you're able to provide a concession of X, Y, and Z. And then it just really boils down to whether developers want to call your bluff or not, to be perfectly honest. This is what we did in 2008. 2008, it was a different time. I remember I had one building where one of the clients went in and measured the doorways, the kitchen, and found out it wasn't ADA compliant, and used that as a reason to try to get out of the deal, sue the developer, and get the deposit back. We ended up settling for a reduced price in a smaller unit. It's going to be, a lot of this is going to be a crapshoot, but it all starts with, going to the developer, seeing if they're willing to work with you, and if not, seeing if, they'll call your bluff and that you'll actually walk away if they don't work.
So I just want to let everybody know that there is a feature on the bottom of your screen, and it says chat. So if you want to send any additional questions, you can, and I'm happy to, again, read them off. So one thing that I wanted to also mention, and for those of the people that were not on the call early, we did mention that if anyone is out there and you have gotten sick and you want to share, we know so that we can all be supportive of you. We are starting a GoFundMe page for need, either with financial hardships or needing medical help. And the one thing that we've been fighting for, so on Monday, we sent an email to Street Easy asking them to stop the $6 a day fee for rental agents, for rentals, and to also stop the days on market clock. I've actually emailed them. We've emailed them every single day asking what they're going to do. And they know they did slash the rental fees by 50%. And the premier agent by 50%. Personal opinion is that they had no choice because they would have lost all of that income anyway. So it's kind of observing. So we are continuing to push them. I think the days on the
Thank you, Heather, for all of your hard work on that to get that to happen. I know how much time you spent on it. Thank you so much on behalf of our community, the whole community.
Thank you, June. I appreciate it. I just hope that it makes a difference. There's some debate about the days on the market saying that it's going to mess up the data. From our perspective, I mean, it's sellers are stressed, right? And they get so caught up on days in the market that if we can help them on any level, whether it's emotional, just like mental, we want to do that. And I think by suspending days on the market, you're at least giving them some sort of reprieve. The RLS, as you may have seen, they have suspended days on the market. So hopefully we can get Street Easy to do that. I sent another email this morning saying, what about days in the market? And we haven't heard back. And I just got an email from Monica Webster. She said, who is notarizing? Aren't banks closed?
Well, that's where Cuomo passed the law that you can do notaries virtually.
Can I, Pierre, do you want me to chime in there?
Yeah, for sure.
Yeah, so that language was passed last night, guys, which I think was in anticipation of his larger announcement today with regard to office closure. We just found out that we're also fully exempt from that office closure mandate, allowing us to be operational, and in conjunction with the remote notarization tool, we can fully close transactions, both remote and in our office, if necessary. First American, just so you guys also know, adopted this technology nationally through proprietary product and also through acquisition of a $300 million company that does this professionally. So we now own the mechanism that does it the best nationally. So we were making sure, on First American on a national basis, making sure that we can close our New York transactions through these tools that have been in existence long before Cuomo made this mandate overnight. So rest assured from that end, if Pierre is able to get your deal to the closing table, which he's fully capable of, we will be able to go close it.
Awesome. That is great news. I've got a few more questions. So, okay, this is a good one. And we went through this back in the last financial crisis. If a new development prepaid broker commissions for the closing, can they get it back if it now doesn't close? And then the second question I have would be wondering what percentage on renegotiation people are seeing. How should we best help our clients?
So for the first one, I'd have to see the agreement that you have with the sponsor. This happened, I believe the building was 101 Warren, if you guys remember, if anybody did deals there back in 2008, where they prepaid half the commission at contract signing, and then obviously a number of deals didn't close. I'm sure in light of what happened back then, the agreements you have with the sponsor now for prepaid commission are contingent upon the deals actually closing. So I'd be hard pressed to imagine there's no clawback provision or something in there. But I'd have to see it to confirm for certain. But I think it's pretty safe to assume that that's going to be the case. In terms of reduction in pricing, I haven't had anything too drastic, north of say 10%. To be honest with you, I don't think we're there yet. I think the people who aren't proceeding are just don't want to proceed no matter what, out of fear, not necessarily give me 25, some astronomical sum off the price, and I'll still do it. And those that want to proceed just have confidence in the marketplace, and a smaller concession like the deal I described to start this call off is getting it done.
Great. Does anybody else have any questions?
Cool. If you guys don't have any questions, like I said, we're fully operational, so please email me or call me.
I do have one question. I think this was extraordinarily helpful and useful to everybody, and I think as the world unfolds and as things evolve, we probably should try to set up another one of these meetings. Good, because I think information is being doled out daily that impacts our market. So if there's any way that we can set up another one of these next week, I think that would be really helpful to everyone, if that's possible.
Yeah, so we were planning on next Wednesday doing a power hour the same way. And so we'll be sending out information on that. I just want to say, at the peak of this session, we had 90 participants, which is amazing. It really means that we all need this connected right now. And I just had one more question that came in. It says, I'm representing a buyer who has a signed contract in a co-op. The parties agreed in advance that if they don't close by May 15th, my buyers will begin paying the maintenance. The management company has postponed all closings. Can the seller enforce the maintenance payment? What can we do? And my buyers would like to get out of the deal altogether and make forfeit their deposit.
They signed the contract before it took place, you said? Sorry?
Yes.
That's an interesting one. They signed the contract with a penalty in place, not contemplating that this is going to happen. So if the buyer causes delay in the transaction, they're forced to pick up the seller's carrying costs, i.e. maintenance, for that period of time. Now, the question is going to be, why is the delay happening now? Are all other parties ready, willing, and able to close, including the bank, including the managing agent, etc.? If the answer is yes, and the buyer is unilaterally delaying the closing because they're concerned with the coronavirus versus something else you may have contemplated they'd be concerned with when they signed, I think that you can still invoke the provision. The nature of the transaction, or sorry, the nature of the provision, it sounds that it just, if the buyer causes any delay past X date. Now, if the delay is caused because the bank can't fund the loan, or the managing agent close their doors with everything going on, then I don't think the seller can invoke the provision.
Sorry, one quick other question that I had for Nick before we go. So Nick, you're dealing with a title company that can't do the e-notary. Is it easy to switch title companies like Dream?
Yes. Yeah, we've had, so I'll mention one. So the answer to that is yes, you can. And we'd be happy to, help service your deal to that end. In addition, one other thing that we've done is enhance and broaden some of the language in the title insurance policies that, and the banks so far this morning, Wells Fargo and both Chase have accepted the language that says that deals may take a little longer to record. So we can close them, but if we can't record them, then your buyer would be exposed. We've essentially enhanced some language to the title insurance policy to protect the buyer and the bank to that end, so we can close, and they will close with an insured transaction. And that's approved. If Brian's still on the call, maybe he'll scream at me for talking out of turn, but I think we're there as of today. That also helps instill a little confidence in our capacity to continue to close transactions.
So another question came in. I have a buyer with board approval that came in Monday night, waiting on the bank to clear the loan, which hopefully is next week. Cannot close until the managing agent reopens. The only way for them to get out of this at this point is to walk away with their deposit.
Yeah, the problem, we've had two managing agents. One said they're closing their doors till May 1st. That's going to cause a lot of problems in our deals, because if everybody else is, ready to close, if the property managers can't issue stock and leases and they're shutting their doors, I don't know how we navigate around that.
Tell us which managing agent that is who's closing.
I believe it was Orsid. Let me check. There was two. Let me pull it up.
Orsid is correct, yeah.
Lauren said Tudor Realty is one.
Which one? Sorry.
Tudor Realty.
Okay. I know where Sid.
Yeah, I'll look through my emails and email you the other name. There was definitely another one, I think. I don't know if they closed until May 1st. I believe Orsid's the one that said they're done first.
Well, can I mention something about Orsid? I know Orsid did do a closing with their doors closed. Friedenbaum and Harari did a transaction. Could be this just did it, where they sent the stock and lease remotely, and the attorneys were allowed to close. That's what Barry Friedenbaum told me. So I don't know.
Oh, another good question. How do you navigate around buildings not allowing move-ins or move-outs and trying to close?
Buildings that are limiting move-ins and move-outs. It's hard to force a buyer to close on a property if they're unable to occupy it. The contract is not going to have anything in there that says the deal is contingent upon the buyer being able to use the service elevator or move in. That's the tough part. It's just it's just really gonna boil down to, what are the factors that could cause the buyer to want to close, and can the seller provide any concessions to the buyer to incentivize them to still close without having the use and enjoyment of the property.
And what about adding an addendum for like a post-close occupancy agreement, so that you get the closing done, but then the parties stay put for a little bit?
Yeah, that makes sense. You can easily do that.
Okay. So somebody just asked if we can compile a list of managing agent closers or limited business hours so we can keep abreast. So I think that what we should start to really utilize the Facebook chat group. So if you're not a member of the Facebook chat group, please request to be a member of it, and we can post those things, these types of closures on that space. Additionally, the other things that we want to hear is we want to hear from you what you need from us. So if there's anything that anybody needs, or anybody has any feedback or input about anything that's going on, like, we really want to hear it, because we want to make sure that everybody's voice is heard, everybody's voice is being represented. And that's just going to keep us more connected and together as a industry.
And guys, through our Eagle 9 mechanism, we have relationships with all the managing agents. I'll see if we can start polling them and coming up with both guidance on what their plans are through closures, and what their plans are, and see if what due diligence I can get and share it back with the group.
Okay, more questions are coming in. One says, are doorman and supers going to physically keep people from moving in or out? Question for renters who have signed leases but they can't move in, what options do they have? And then yes, we'll provide the link to the Facebook group.
So are supers and the doorman going to prevent move-ins? I mean, they'll just, honestly, the building security will prevent access to service elevators. If they don't want you to move in, you're not moving in. I don't think there's any real way around that. In terms of renters who can't move in, if you sign a lease and you have approval for occupancy and the buildings won't allow new tenants to move in, I don't see how the landlord in that circumstance requires rent payments during that time period.
I think in general, we're just going to see stricter rules altogether in buildings. I can tell you, I happen to live in a co-op. They are now, not only is the gym closed, not only are trainers not allowing, they're not allowing dog walkers to walk through the building. You have to bring your dog down to the front, go outside, and hand your dog to the dog walker. I think we're going to see a lot more lockdown of everything. I think move-ins, move-outs are like, I just don't think you should plan on that at this point. I just don't think they're going to be happening.
My operations manager just texted me that Austin is effectively doing things remotely. So they are actively open, but not to walk in there, but they will do things remotely. So they are closed, but they are, she's working on a deal right now with them, and they will do things. What did she say exactly? They're working remotely and have new specific rules for application submission.
Right.
So also along your point, one of my buildings has a occupancy mandate for the elevator. Either 2 people or 1 family could only be in the elevator. That's the extreme that it's getting to.
Wow.
So we're going to wrap up because we're approaching 12 o'clock. I want to say, if you have any additional questions, to go ahead and send them to me. And what we'll do is we'll just put together like a Q&A, and we can circulate the document and keep it going. And just go from there. But I just thank you so much, everyone, for coming today.
Thank you.
Guys, thanks for setting the yeah, if you guys need anything, please don't hesitate to reach out, and hope everybody stays safe and calm during these times.
Thanks, Pierre.
Thanks, guys.
So much, Pierre and Heather. Have a great day, everyone. Stay safe.
Thank you. Thank you very much.